Straight to the point, I'm going to show you in this masterclass how you can maximize your profits using Elliott waves, but also 3 other independent technical factors. So pattern, Elliott wave theory, price, time, and momentum. That's going to give you a strong edge to trade any market at any time frame. But today we're going to focus on the euro US dollar. So with that said, let's dive straight into the technicals. All markets are predominantly driven by fear and greed, human psychology, and we want to measure that psychology using Elliott wave theory. That's going to give us the pattern position of the markets. So the key basics are you want at least 2 degrees of wave count, and markets typically move in 5s and 3s. So what are we talking about here? What we're talking about is a buying cycle of a 1, 2, 3, 4, 5 of a wave 1. That's called 2 degrees of wave counts, followed by the most common type of correction, which is an A, B, C correction of a wave 2. Why is this important? Because if you can identify the end of a wave 2, you can buy and get ready to ride a macro wave 3. Now, when we're looking at the euro US dollar, literally right now on the right hand side, the live price data, that's exactly what we have on our hands. We have this nice, beautiful 1, 2, 3, 4, 5 on the upside of a wave 1. We've had this textbook A, B, C correction. Now, do we know how it's going to play out? Well, the answer is no. We can only look at what is highly probable. But now, from a pattern perspective, we've got that first core independent technical factor telling us we are in a position to complete a wave C of a wave 2. This is important because after a wave 2, we get a typical wave 3, which extends beyond the wave 1 by a considerable amount. Now let's move over to the second technical factor. We're talking about price. Now, with the buying and selling psychology, when we're looking at a wave 2s typically retrace, in other words, come back down a typical amount. There's a minimum and a maximum. There's 3 ratios you want to be aware of. So again, just to make this crystal clear, when we see this 5-wave buying cycle to the upside, typically there's a sell-off, profit taking, and it's typically 50, 62, and 78.6%. On the right-hand side, I've drawn 2 of them, which is the 62 and the 78.6. The reason I got rid of the 50% was because it was all the way up here and the price is all the way down here. And what we can see right now is that the euro is close to the 78.6%. Now, there are other key, more advanced Fibonacci price ratios, but right now, this gives us a nice ballpark to say, okay, we're in a pattern position to complete a wave 2, but we're also in a price position to complete a wave 2 as well, a wave C of a wave 2 on 2 degrees of wave count. So now we've got 2 strong independent technical factors. By the way, if you want all 4, I've got a free trade plan. It's my personal trade plan that covers pattern, price, time, and momentum in exquisite detail. You can get it in the link below, download, and it's going to really serve you long term if you really want to take your trade into the next level. So now let's move to the third technical factor. We're talking about time. So as we saw with price, when price comes to retrace a certain amount in terms of there's a sell-off. With time, there's a certain amount of time a correction takes. So what we can do is we can measure how long did this 5-wave move take in terms of number of days, and then we can project in advance what's called time retracement zones for a typical correction. Now, what we have over here is 2 time zones on the right hand side. Is actually the 100%, in other words, how long did this cycle take of this buying behavior, and this is now 100% of that, which is a typical maximum. And then the other one that I've done is something called a low to low to low rhythm cycle. So now we've got this time zone and a price zone telling us we are now in a key pattern, price, and time zone. These are 3 independent technical factors telling us that this particular market, and this applies to all markets and all time frames, but right now we're looking at the euro US dollar, is in a position to reverse, and if it does take off, highly probable that it will go beyond this point. Now, the last part of the technical system to give you a very strong edge is momentum. It gives us the green light before pulling the trigger and placing the trade. And with momentum, you ideally want to place it on 2 time frames. Now, you may have spotted in the bottom right hand corner, I have this dashboard. This is something that I created for my clients, and it just tells me that the weekly momentum is strong oversold. In other words, we are at or near a weekly low in a momentum perspective, and the daily momentum is a strong uptrend. What that means is this blue line has just gone above the red line, and it tells us that is more than likely going to coincide with a low. Now we can place an order. If you want to take your trading to the next level and you would like me to do a weekly trade plan for you, well, then you're going to love my $1 million trade system, because I also give you trade signals. So when we get setups like this, you get an email with a video guidance on setup, entry, trade management to exit. I've created a free $1 million trade system masterclass, is in the link below, and it just tells you how you can take your trading to the next level. And if you want to work with me closer, check it out. Until then, I'll see you in the next video.